Welcome, everyone, to episode 6 of the FTX podcast. Today, we're happy to have with us Sam Trabucco, who is a quantitative trader at Alameda Research. Welcome, Sam.
Hey Tristan, how's it going?
Good, good. I'm really happy to have you on. I was wondering if you could start with just a slight introduction of yourself to all the listeners.
Sure. Yeah, so like Tristan said, I'm a quantitative trader here. I arrived at that by being really into math, basically in high school. Did a lot of like math competitions and stuff. Ended up going to MIT for math and computer science, and going like at MIT math, the math department. It's fairly common to go into quant trading if you don't go into academia, which I decided I wasn't going to. So I ended up doing an internship at SIG, which is a quant trading firm in the US. Went back there full time. Was a trader on their bond ETF desk and their sports betting desk for a bit before taking a year off from trading, working on some other stuff. During which time I also started trading crypto in my PA and recognized pretty quickly that it was like pretty dumb not to be working on it full time. And looping back to doing math in high school, I knew Sam, our founder, from math camp during high school. And I knew he was working on this and got in touch with him once I decided that I should be doing crypto trading. And yeah, here we are.
Here you are today.
Yep.
Yeah, that's pretty sweet. So I'm going to actually start on a pretty different track because I have a couple curious things. So I heard around the grapevine that you have the 8th highest lifetime Scrabble average of all New York Times crossword constructors. So that is actually pretty high merit. And I just think it's very interesting because, you know, you're a quantitative mathematician and computer scientist, which in my mind doesn't translate into the literary world.
Right.
So I'd like to start by asking you, did you have books, authors, or ideas that had a strong impact on you when you were growing up that pushed you in this direction as well?
I got into crosswords because when I was a kid, I used to play competitive Scrabble. I've played a lot of games throughout my whole life, but Scrabble I always really liked. And it's largely like anagramming and like hangman style stuff that I like doing. And it turns out that crosswords are more of a math exercise than you might think. There's like software that can help you make them. There's a lot of like tuning algorithms to like get like the fill words to be the least bad as you can, and like using like Google search hits or whatever to create programs to score words like algorithmically instead of having to. Well, I mean, there's a lot of manual stuff as well, and it's definitely a process that humans are quite important in, but. It's a much more computational exercise than most people think. Yeah, so I wouldn't say that there's like an author or anything like that that's influenced my my path to get here. I'd say it's more my aptitude for being able to apply quantitative my quantitative skills, which is always what I've been the best at, to a ton of different things that most people wouldn't expect you to be able to. Is a lot of where the advantages that I found in my life have come from.
That makes sense. And then so this ties into the math question. So what spurred you into this world of math? Do you remember? Did you have an amazing teacher when you were younger? Or
Right. Yeah. So I'd say that that like for instance in like first grade or whatever, I was really good at like the like multiplication tables. And I was always like the fastest in my class at that. And I sort of thought that's where it ended. I was like the best in my class at math, but like whatever, someone else was the best in our class at reading and like things like that. And I sort of didn't think that made me special in any way. And that continued through middle school. Middle school is where I started finding out about math competitions, and math counts is the first big one that I did. And I forget what the place was, but I did like quite well in 7th grade at that. Then got exposed to the other kids who did really well at it, which exposed me to the broader world of math competitions, and did a ton of them through high school, like the AMC, USML, like those ones, which will be familiar to people who are familiar with math competitions and meaningless to most other people. But that also that led to me going to like math camps during high school and building a network that I also maintained at MIT and obviously now as well, given that, yeah, like that's how I know Sam and a bunch of other people who I've worked with in the past.
Just out of curiosity, how is the formatting for these math competitions?
Yeah.
How does this work?
It tends to be very speed based, where the focus is more on fast thinking than it is on deep thinking. Whereas when you think of like a mathematician in academia, you think much more about deep thinking. And I actually think that the fast thinking that is inculcated by math competitions makes people who are good at them especially well suited to trading. In middle school, it's all fast thinking. It's like most of the problems can be done in 20 seconds. As you get older, the types of things that they ask you to do require more deep thinking, but it's still like relative to like real math or whatever. Just like a bunch of rapid fire questions and seeing who can do the most the fastest.
So you say this rapid fire is more suited for trading, and then the deep thinking, is that more for theoretical math, or where does that tie into?
I mean, like deep thinking is important in all kinds of areas. Deep thinking is all you'll see in when you're doing like math research, whereas for like a quantitative trading firm, you need both deep thinking but you also need a lot of ability to think rapidly, as like especially in crypto trading with market conditions that can move very very fast.
Totally. So if you're making perhaps a strategy to use over time, then it's more of a deep thinking
Yes.
project. But if it's the spur of the moment thing, then okay, that actually
Yeah, that
makes a
sounds
lot of
right.
sense. So I'm curious, you realized you were good at math. At what point did you realize this translated over into other problem solving things, such as strategy games and I don't know what other things were you enjoying around this time that this ability helped you with?
Yeah. So like during high school, I'd say is when that started. Probably when I went to math camps. Actually, the people are really into games at math camps, which I'd always been sort of like kind of into. Like I'd play like Scrabble with my grandmothers or whatever, but I wasn't like playing like super strategic games on like any sort of real level. And yeah, like almost everyone was playing them, and so I got into playing them as well. And this, like the mindset that I had cultivated by like learning to be good at math was just sort of immediately relevant. And yeah, I'm not really sure where the mindset, where the ability to translate those skills arose. I just know that like whenever I'm faced with any new situation, like pretty much in any field at all, I try and apply quantitative thinking.
So with these strategy games and stuff, I want to dig just a little bit deeper because it makes me wonder if this is kind of what sent you towards trading versus academia, like having done all these math competitions and then started these games that were, pretty quick. I know Scrabble is can be a fast game.
Yeah.
Did you gain some kind of love for this thinking under pressure that sent you in this direction, or?
If I'm being honest, it was fairly lucky. I got to college thinking I was going to go into academia, just because it was sort of like in like high school math kids like sort of imagine that as the thing you end up doing. I think there's a bit more of like or you can be a software engineer culture as well. But like these are like your options. And so I was like sure I was going to be a professor. Within a semester, I knew that was not going to work because I just like I routinely just get frustrated if I can't solve a problem within like a few days, which is what like getting a math PhD is like not being able to solve a problem for like 4 years instead of 2 days. Yeah, so I sort of just recognized that wasn't going to work out. And like I mentioned at MIT, a lot of math majors like do like a trading internship, and a lot of them end up going to like a finance firm full time as well. So I just sort of did that because other people were doing it. Ended up being able to recognize that it was basically playing a game all day, which is like it was like perfect for me. Is exactly what I wanted to do. Like playing professional poker is something I'd love to do as well, but this is sort of a more profitable version. And I forget why I said A. But yeah, that's the gist of my. And yeah, it was quite a lucky thing to have tried that worked out really well.
Okay, so back to the college days. I'd like to know, how did this internship for SIG work out? Was it just, as you were saying, other people were doing it and it was easy to start doing an internship there, or did you have to find the people and go for it?
Yeah, I mean, the finance firms at MIT's career fair are like occupy the second most space behind like the like big software firms like Dropbox or whatever. So everyone's aware of them, and their interview process is basically like a math competition. So like people who excel at math competitions tend to be able to get them if they want them. And yeah, like I had several good friends who'd done this internship the year before, decided to do it, and the internship itself is really great. There you play like several hours of poker per day during the internship because like poker and trading turn out to be quite analogous, and getting good at one tends to get you better at the other. And also like if you're good teaching someone to do one tends to lead you to be able to evaluate whether they'd be good at the other, which is why they do it. So that was something that drew me in as well. But yeah, that internship convinced me that I'd be good at quantitative trading. Like it's a pretty good experience in terms of getting you to know what that entails and whether you'd be good at it.
What
It's like
year? What
7 years
year of
ago, I
college
guess.
was this?
That was junior year, so that was in 2013.
Okay, so you still, was it during summer after junior year, or was it while you were in class?
Summer after.
Summer after. Okay, so then you just had senior year and then you'd be done.
Yep.
And at the end of the internship, I'm assuming they liked you and they tended you an offer.
Yep, that's right.
And then so basically
They loved me.
they like stay with us forever. So yeah, how does that work? You'd go and how does just for those listening that might one day want to go do an internship at a trading firm, you go do the internship, and if you do well, they tend you an offer for when you graduate, or is that?
Yeah, I mean, I can't speak to every company,
Mhm.
but I think in probably almost all cases, that's basically how it works. And then some places frame it a bit differently. Like some places will give you an internship offer, and then if 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 they give you a return offer, then you're basically like in for life to some extent, unless you like do something like ridiculous. Whereas some places give you an internship offer and then hire you full time for more training, and then like cut a lot of people in between. So depending on which one it is, like the bar for whether you get a return offer is higher or lower.
And any tips for people that may be going into these internships?
Yeah, think practice fast thinking rather than deep thinking. It tends to be more relevant. Like play a lot of games, especially quantitative strategy games, like poker, like Magic the Gathering, things like that. It's not, and also some video games also, like turn-based ones, tend to be pretty good for learning some of the skills that you don't necessarily imagine are going to be necessary. It's pretty. The crossover is pretty good between those kinds of games and trading.
Because at what point were you younger when you already started really liking crosswords, or was that?
Oh no, I didn't do crosswords till college. I thought that making a crossword would be the same as playing Scrabble, so I just sort of like decided I could do it, which is an overconfidence that has served me well in the past. It's not true; it's not at all similar. But I decided that but like I ended up getting good at both.
Curious, so you thought you were going to be good because you were really good at Scrabble, and
Yeah.
then you go to try, and was it just a total faux pas, and you had to learn it, or?
Yeah, I was quite bad at the beginning, but I had decided I was going to be good at it, and so I needed to become good at it.
Well, yeah, I see that self confidence. That's great.
Yeah.
That's really good. And what was the path from learning how to make them to getting to the point where you were good enough for one of the most prestigious
Yeah,
newspapers in the world?
again with the overconfidence. I just sort of sent my bad puzzles in, and it turns out that one of them was like close to good, and the editor Will Shorts recognized that and like encouraged me to edit it. Which and in that case, I was lucky that he has like a 4 month lag between when you submit and when you get feedback. And it turns out that during that 4 months, I'd gotten a lot better, so I was able to make that puzzle better. But yeah, I probably was submitting much earlier than I should have been and got lucky once. And then, yeah, that gave me more confidence. So,
I mean,
which is exactly what I need, as you can tell.
that's actually really cool. From a few people I've interviewed and from my personal life experiences, it seems that reaching out and trying for things that may seem an impossibility at the time can lead to much different results than you'd expect. I mean, the fact that I got hired by FTX was one of those, was completely an act like that of choosing something that you knew you really wanted to do and going for it.
Yep.
So, big respect for that. When you were starting to trade crypto, would you mind sharing a little bit of what you were doing at the beginning?
Yeah. So what I was doing in the beginning, I started trading crypto first during like alt season in late 2017, early 2018. I think that was when that was. And this is back when you could like get a normal Binance account from the US. And so I did that and was like making a bunch of money trading shit coins. This was like mainly just for fun to start, but then started recognizing like myself and a friend started recognizing that like these markets trade totally out of line with each other. These futures are like trading at crazy premia. Like if you spend like a week getting a great setup, you can just make a ton of money like trading spreads between these things and executing arbitrages, which didn't feel like it should be possible, but like we empirically demonstrated that it was possible. And it wasn't soon after that I decided, like either there should be like either we should start a company that is like doing this on way more capital than we have access to and like with a bigger team, or we should like find a team that's doing that. And I knew Sam was doing that, so went for that. One cool thing I was doing before joining Alameda was something I've described on Twitter, which is trading Binance listings. So it turns out that back during alt season, whenever Binance would list a new coin, if it was listed like on Bittrex, for example, before that, it would just like 3x like in the minute after the announcement was made. And it turns out that you could set up like a bot to scrape Binance's blog and know this before the pump happened, like a few seconds before. So if you kept money everywhere, like on Bittrex, for instance, then you could just set up a bot to know when Binance was going to list a coin and just like market buy it. And it turns out that like something simple like that was a like quite profitable strategy that I was able to like make from a laptop. So given that, it's sort of a no-brainer to drop what you're doing and do this full time.
Yeah, absolutely. I mean, those were fun times. I remember I made quite a bit of money with the Tika coins.
Oh yeah.
You'd hear which ones were coming out beforehand, and then just buy a little bit and just blast off to the moon.
Yeah.
So were you already using automated strategies when you were doing it by yourself with your friend, or was it mostly manual at the beginning?
At the very beginning, it was manual, and then like set up like simple bots to do stuff like that. But it wasn't doing anything like, as sophisticated as what we're doing here at Alameda at that point.
Yeah, I can imagine. You were still full time at SIG at this point?
Oh no. I this was during the so I was working on a non-trading related project for like 18 months, I think, in between when I left SIG and when I joined Alameda, and I think that was like some months into that. I forget exactly when.
A question I have for you that I guess ties into Alameda, but also when you're doing your own thing and SIG is, are there any specific parts of math, perhaps a little more specific than just fast thinking, that people could look into if they want to enter this world?
Yeah. So there's a lot of I'd say there's two sort of kinds of topics to look into. One is statistics, and the other is like closer to computer science, but like machine learning type stuff. Like we do a lot of like time series analysis in trading. We do a lot of like statistical model building that is exactly the kind of stuff you would learn if you were taking like an advanced statistics class from like at a college. So I think that's one area to look into. Statistics is also super relevant for like risk management, like understanding what kind of moves are probable and how that impacts the expected value of a trade. It's like all stuff you'll learn in a stats class. So that's one thing. And then I basically think you can't break into computative or quantitative trading without having a good understanding of computer science. I think that it's quite hard to make a profitable strategy that is doing a ton of trades if you're doing them manually. And you also just need to be able to ingest a bunch of data and do analysis on it, which requires you to know how to code, basically. And
Does the language matter, or is it just the logic behind whatever language?
language only matters if you start getting into really low latency stuff. But if you're just doing like like running studies on past data or executing strategies where like 1 millisecond doesn't matter, then it doesn't matter at all.
So to do a quick recap of things that could help people enter the quantitative world would be quick thinking games, strategy games, things such as poker, things such as Scrabble, things such as Magic the Gathering, where you have a determined period of time where you need to make a decision quickly, and then it goes on to the next and back and forth.
Yep.
From the math, it's statistics and then some machine learning mathematics. And from the computer science part, it is basically being comfortable with languages enough to set up your models.
Sure. I mean, in order to get like a really robust setup, I think you need someone who has the skills of like a pretty good software developer. So you can't just like, I think it's unrealistic to, for instance, create something like what Alameda has without having a team of software developers. But with that said, you can like having a fairly basic understanding of Python and like NumPy, things like that will be enough to get started to run studies and to set up basic bots.
Mm-hmm. And then, so, you took this year and a half where you weren't trading and you saw Sam was starting his project. Did you just think, oh, this would be cool? What was your motivation? Was it because you were already thinking about crypto?
Yeah, so I was already thinking about crypto, and I ran into Sam. I forget when it was, but it was probably like halfway through that year and a half. That's around when he was thinking of starting Alameda, I think. And yeah, he just described it as like a cool thing he just described it as a cool thing that he was doing that he left Jane Street for, that sounded really cool to me. But it wasn't something I was immediately thinking of doing because I hadn't started getting into crypto. When I did start getting into crypto, I just thought back to that. And for several months, I was thinking of contacting him about it. And finally did. I forget what the impetus was. I think I saw that Tether was trading at like 90 cents or something, and like saw that you could make 10% on like whatever money you had. And yeah, I just reached out to him.
And at that point, he was in Berkeley just with Gary, or no, there was some other people already.
There was a team at that point. Gary went to the same math camp as Sam and I, so I also knew Gary. Great stories about Gary. um, but
Uncensored podcast coming.
Oh yeah. But yeah, there was a team at that point, and like they had a bunch of devs who had like created a setup that I was dreaming of, and it was a real no-brainer to join.
Did you have to move to go to where they were? Where were you?
I was in San Francisco, so I didn't end up moving because the office was in Berkeley, and I like being like right next. I like living right next to the office if possible. I also love Berkeley. I kind of wanted to move there for a while, but I was already living in the Bay, so it wasn't a big deal.
So you're in Berkeley now. You're in this dream setup. You're finally part of the crypto world, which had been interesting you for some time. You're finally able to trade again, which probably was really nice. How did you come into this team and start carving out your niche? Did you have some unique talent set that people were lacking, or?
Yeah. So I'd say that besides Sam, I'm probably the best at fast thinking on the team, and that makes it so that like in the like 1% of days when things are craziest, I think I add a disproportionate amount of value relative to like how much other people add on average on a given day. And so yeah, I think that like the first time I was working here when there was like a huge move, like I saw like a good plan of action fairly clearly, and that sort of led people to like trust me more in situations like that. And yeah, I'd say that's my and like in general, like I'm pretty good at thinking about risk and like making and like thinking about how to discount the expected value of a trade based on how risky it is and like what our chance of and like for instance, I'm pretty good at thinking about like we have this position that we know is good by like X%, and we can lever it up however much we want. Any amount of leverage is going to lead us to a certain chance of getting liquidated, and the higher you lever it up, the greater that risk. I'm pretty good at thinking about like, oh, what should our leverage be in that situation? And then, yeah, I mean, we have a very small team, so it's not too hard to like if you have strong trading intuition and like some skill set that applies pretty directly to quantitative trading, like being good at fast thinking or being good at like designing studies and coming up with ideas for what trades we should be putting on. You're most likely going to be able to find some niche here, and yeah, I was able to.
Would you mind talking me through a little bit around risk versus EV? When that's something I'm curious to learn how to do better.
Sure. One simple example you can talk about is let's say that like you're like 55 or whatever. So you've saved some amount of money throughout your life, but also because of that age, you're probably somewhat capped in your earning potential in the future. And then let's say that I come to you and I have a coin that is weighted. It's like 60-40, and I'm going to let you put any amount of money on an even money flip on this coin. It's obviously like probably the best trade you're ever going to do in your life to put like a huge amount of money on this coin because it's like 20% good. And let's say that I give you 1 second to decide that this prevents you from doing something like, creating a fund to do this for you or something. Like how much are you of the money that you have are you willing to put on it? It shouldn't be 100% because again, your earning potential is likely capped. And maybe 55 is too young, maybe like 75 or something. On the other hand, if you ask me this question right now, I'm pretty young and I still have earning potential. I would easily put all the money I have on this coin flip. I have almost no reason not to. And the difference is that my risk tolerance can be way higher because the money that I have right now represents a way smaller fraction of the total money I could have in my life than for someone who's already passed their career. There are similar considerations that we make in trading. Like we have some capital base, we have some amount of money where if we lost it, it would be like really, really bad. And then there are other amounts of money where if we lose it, we're like, oh, like that's just our P&L from a day. We'll make it up tomorrow. And yeah, so we basically think about what are the probability of these bad events happening? How bad are they actually? And use that as a way of discounting how good a trade actually is. And yeah, there's not like a regimented way we do this. There's a bunch of different ways you can discount EV for risk. And it's not clear that we're even doing the best thing, but we're doing something that has seemed to make sense.
And a lot of the time, do you have time to think through these things, or are they pretty split-second decisions?
Yeah, like most of the time we have some time to think about it. Not always though. Like on March 12th, things were moving 10% in a few seconds. Like putting on, like deciding what your risk of liquidation is, and using that to decide how big a position to put on when the market's moving 10% in a few seconds. you don't have much time to decide. And yeah, those are my favorite days. Not that they happen very often, but like some people shut down when they're in super stressful situations like that, and I tend to turn on.
That's awesome. That's actually really cool to hear. Would you mind telling me a little? Was March 12th one of the most exciting of these you've had since you started?
Yeah, certainly. It was the most exciting. Yeah, interestingly, I hadn't taken a day off in a while, and that was my first day off in some time. But then I looked at my phone like a few hours into that, and it was like certain I was like that the app was bugging or something, and the ticker and like the first digit of the price was wrong, but it was not. So I ran back in. But yeah, that was quite an exciting couple days. Yeah, because the market was the market had wild moves. It was impossible to predict more than a few hours in advance what was going to happen, and there were so many huge trading opportunities, and the question was figuring out which were the best, and it was changing minute to minute what the answer to which is the best is, and yeah, like even just how to allocate our capital, which is usually not the hardest question to answer, was really hard to answer and was changing very fast. So yeah, it was quite an exciting time.
So you say you turn on, and my assumption here is that it goes back to that confidence you were speaking on earlier, where you have showed yourself enough times in life that you can trust on your intuition. But still, I'd like to know what helps you put your money where your mouth is or where your intuition is, because it's non-trivial amounts of money,
Yeah.
and it's moving really fast. So how does that work for you, or
Yeah.
how could it work for others that want to learn how?
Sure. So I'd say that it's definitely a huge thing to become okay with risk. It's not something I was naturally good at, or it's not something that I was inherently good at anyway. Yeah, like I think that poker is a great way of becoming better at being okay with risk. Just because like when you're playing poker, sometimes you get into a situation where you going all in is correct, but it's something that a lot of people are nervous about, especially if they're betting with more money than they have before, and being unwilling to go all in when you in like the best situations to do so make it so you basically can't be profitable at playing poker. So, like running the numbers for this is something that should make someone either not want to play poker or like just immediately okay with it. And then doing it a few times makes it just feel way less scary, especially if you can rationalize in your head, oh, like it's not like this is the only time I'm ever going to do this. As long as I'm not risking too much money, which is what we were talking about before, I should just always be okay with getting a lot of money in when I have the best odds, just because it's not my only chance. If I do this 100 times, assuming I'm not incorrect about whether this trade is good, then sure, I'll lose sometimes, but I'll win more. And yeah, I think that being willing to optimize for mean behavior instead of median behavior is a really important thing in trading, and something that does not come naturally from it.
Feeding off of that a little bit, because feeding off of using mean instead of median, how do you do that when we have a market with so much idiosyncrasies and strange occurrences? So how do you tie or bridge that gap between knowing that most of the time being on the mean is the best decision, and then sometimes you need to completely switch your game plan?
Yeah, that's a really good question, and it's quite hard to answer. And I don't mean that in like a hard for me to answer right now kind of way. I mean a hard for Alameda or like anyone to answer all the time kind of way. This is something we talk about all the time on the desk, is trying to figure out like, oh, like we could fit our strategies to this study over the past 2 weeks, but there's like some 1% event that makes it just wrong to do this, or rather, there's some improbable event where if it happens 1% of the time, then the strategy's bad, but if it happens 0.5% of the time, the strategy's good. And how do we decide which of those it is? And yeah, there's a lot of reliance on intuition for that kind of decision. And yeah, rational people can definitely disagree about things like that. And yeah, so it's something that comes up a lot on the desk, is probably the basis of most of the arguments on the desk. Not that we have like bad arguments or anything, but like we like having disagreements like that. And yeah, it's a great question.
Would you share some earlier experiences of some of these that may be gone now that you found exciting at the time? You think of any?
Sure. So one thing to talk about might be the BCH fork, the hard fork into BCH and what turned out to be BSV. I'm not going to say any exact numbers because I don't remember them. But there were giant spot and future spreads on the BCH futures on, for instance, OKX that were expiring after the fork. just because like there was like you had to assign some probability or not some probability, some expected value to what BCH would be worth and what BSV would be worth after the fork. And it created these giant spreads, which actually made it. And because BSV was being valued at a high enough value, the spread reached the limits of how far from the index OKX was willing to let these futures get. And so they were trading at that limit for a while. And this trade should have just been putting on the spread should have just been incredible. But there's some probability that OKX is going to expire the futures early. I think probably the world was undervaluing that probability in that it did happen, but I don't think people thought it would. Let's say that we are able to recognize that there's some probability of this event happening. If we can, like it being 50% versus 1%, does actually, or like 50% versus like 30%, I think, would switch whether the spread is good to put on versus whether it is not. And that's like not something that you could possibly know beforehand. And yeah, trying to figure out like how idiosyncratic will the exchange handle this is something that came up then and has come up since then as well.
And for those that may not be clear, would you mind explaining what it means for them to expire the quarterlies early and what that would mean?
Sure.
What that would mean as well as for the traders too that were trading those?
Yeah. So the way expiration works is that they do a TWAP of the hour leading up to the expiration time, and that's what the future will expire. That's the price the future expires to. It was going to these futures were going to expire after the hard fork, at which point BCH would be worth less because it would have split into BCH and something else, BSV, which the futures were not going to expire to. And what they did was expire the futures before the fork, which meant that BCH had not lost its value yet. So a bunch of people had gotten short the futures, and whether that trade is good depended on when expiry happened. And because it happened early, the shorts got fucked over. Yeah,
that's definitely some idiosyncratic risk right there.
Yeah, for what it's worth, I don't think that's this exact thing is quite unlikely to happen again. OKX did a lot of work to make it so their systems are more robust to situations like this.
Would you say that's a trend along the whole cryptocurrency market? Is the exchanges are getting more, the platforms where you trade are getting more serious?
Yeah, I think that people are definitely learning from, like, whenever something goes wrong, I think people learn from it. I can't think of too many examples where like something egregiously bad happened on an exchange and then A, they didn't fix it, B, all the other exchanges didn't also make it so that it wouldn't happen to them. So yeah, I'd say in that sense, exchanges are getting more serious. I think they've always been serious about providing a good experience, and they're just learning how to do that better.
That makes sense. I really like you saying that, how one exchange commits a mistake and the other exchanges learn from that mistake quickly.
Yeah.
And it seems to be something, it happens in everything, but you see it a lot in the cryptocurrency world. It made me think of all these DeFi projects where, they'll get hacked and they'll have these huge security breaches. And then all the other projects will just be like, oh shit, and change their protocols so that won't happen to them as well. Yeah. Something I've been thinking about a little bit, and I know it's been talked about, not so much now because it seems to be waning down, but was the S&P 500 and Bitcoin correlation.
Yeah.
Would you talk to me about this as if I only knew about the S&P 500?
Sure. Yeah. So for years, the crypto markets and like the S&P and like other traditional financial products didn't exhibit any real relationship with each other. And like this sort of makes sense. Like the sorts of like crypto was pretty minor. There wasn't a ton of money in it for a while. And the sorts of people who would invest their money in the S&P are like didn't tend to be the sorts of people who would invest in Bitcoin. Like Bitcoin is a much more risk on asset, for instance. Like, I mean, the S&P is risk on as well. But like Bitcoin is seen as like some like boutique product that like buying a ton of is like clearly a huge risk that you like aren't just going to do. And so like for a while there was no reason for them to be correlated. And in particular, a lot of people before March thought that in a huge financial crash like we saw from COVID, it was possible Bitcoin would actually go up because it might be seen as a flight to safety asset. What we saw in the crash is the opposite. The S&P and like every product in the world basically crashed a lot, and so did Bitcoin. And I mean, there's like various explanations for that. Like probably the simplest one and the one that seems to be true is that people became extremely risk averse and like you can see that because they were taking their money out of the S&P, and the last place that they wanted their money was like on the internet in like these fake Bitcoins that most people don't understand. That's not my opinion for the record. But yeah, that's basically what happened. And ever since then, like this correlation has like come and gone during periods, but like overall it has always for the past few months had a bigger correlation than it had before. Like the really base level explanation I have for that is that like before this, crypto traders didn't have to care about the S&P. That was sort of like an entrenched thing, and they just weren't caring about it. They had to start caring about it when the entire world was when the entire world was caring about it. Like you didn't have a choice but to know what price SPOOs were at during March. It was like all anyone was talking about. And since then, it has like this hasn't been true for everyone, and it has been true for different people over different periods. But it has been more true than it was before that every crypto trader just knows what the S&P price is because now they've become attuned to watching it. And so it's sort of a self-fulfilling thing. Like more people are watching it because they have to, and therefore more people have to watch it because if people are trading Bitcoin against S&P, then the price will move with S&P, and so more people have to watch it.
What about, so this is a thought that just came up when you were speaking, but so all these people had to take out their money, or they didn't have to, they want to take out their money, so they took it out of S&P 500, the SPOOs, they took it out of Bitcoin. Could this rise of Bitcoin since March 12th have just been the inverse of that? As people returned money into the SPOOs, then they returned whatever smaller fraction they had in Bitcoin into Bitcoin?
Yeah, absolutely. It could that effect has contributed almost certainly, as well as the self-fulfilling nature of like people just expecting Bitcoin to go back up because Boost went back up, therefore they buy it, and it is a feedback loop. Bitcoin also has some effect where if it, like let's say that SPOOs move like a few percent down, Bitcoin is likely to move. If it's going to go down, it's likely to go down more because the liquidations on exchanges happen way more than in traditional finance, which contributes momentum to these relatively big moves.
Understood. So, and during this time when it was super correlated, you'd see them return to each other when there would be big moves on either one, or not necessarily?
Yeah, I guess what you'd mainly see is Bitcoin going in the same direction, but often like in the magnitude would be greater. And so you saw that on the way down, and we've also seen it on the way back up.
I know this is a much discussed topic, and we've had a digest about it and everything, but about liquidations.
Mm-hmm.
And it seems to me it's just one of the biggest things for crypto traders is this whole world of liquidations and high leverage. Do you think this is going to continue to impact it at the same magnitude, or is crypto becoming a more efficient market?
Right. So crypto is certainly becoming more efficient, but I don't think that impacts the extent to which liquidations can have a huge impact on the market. The main reason that you see liquidations having a big impact versus the impact they have in every other market in the world is that every exchange operates totally separately. There's no prime brokerage in crypto. And if you have money on one exchange, then you, like for instance, if you have a Bitcoin on one exchange, it requires like an hour-long transfer to get it somewhere else. And you can't offset risk on one exchange with risk on another exchange for no capital. You have to tie up capital in both directions. And yeah, unless that changes, I think that capital management and risk of liquidation will always be a huge factor in crypto trading. On the other hand, high leverage is still possible, which can help mitigate it to some extent, but it also contributes to it because people put on too high leverage. That's what causes them to get liquidated. And yeah, that hasn't really slowed down. If anything, it's felt like it's picked up in the recent months with the high volatility. And so, yeah, I'm not, something big would have to change for capital management and liquidations not to be a big consideration.
Perfect. So it's good to know. I mean, I actually like hearing that because it shows we still have some time for this market to discover what it will be at some point. And perhaps we won't have as much controls in the market, perhaps. But that doesn't make sense. If we have a lot of liquidations, we'd have more control, right? If we mess up.
Yeah. So one other point here is that, like I say, something big has to change for this to go away. It's not going to go away because of this, but more exchanges moving to systems like FTX has, where you can use like a variety of different coins as collateral, can help mitigate this quite a bit. On the exchanges where in order to put on a short Bitcoin position, you need to hold long Bitcoins in order to put collateral on. And you also need to hold long Bitcoins in order to put a long position on. You run into a lot more, like it becomes this much harder to manage your capital base, and difficulty managing your capital base is a huge contributor to liquidations. And so more exchanges having systems like FTX's in this regard should help. And you see that FTX has way fewer liquidations than other exchanges does. So yeah, hopefully this is a direction we can continue moving in.
Yeah, absolutely. And I'll put something in descriptions where you can actually see how enormous the difference of liquidations is from FTX to Binance and BitMEX, another competitor. It's quite incredible. Just for personal curiosity, is that called convexity risk when you have the risk of collateral in the same asset as what you're trading, or is that a different thing?
It might be. There are a lot of terms that I know are right, but I never know what they mean. So it might be.
Sounds like my life. Okay, question of the hot topic of the moment. So, what is this whole compound CUSDT thing that's going on? What are all these trading firms doing with this asset right now?
Yeah. There's a lot going on there. Compound is basically a site where you can lend and borrow coins, and the the tricky thing that they're doing is they let you basically farm their coin called comp if you are doing this. And the amount of comp you get varies depending on which coin you're doing, and it also is like a dynamic thing depending on what the supply of the coins to lend are and what the demand is for borrowing is. But yeah, so basically what they've set up is a system where like anyone can lend, anyone can borrow, and if you're lending or borrowing something, or if you're like, for instance, if you're lending something that not many people are lending, then you'll be able to collect a lot of comp. And yeah, obviously comp, the coin itself is going crazy as well as like every DeFi coin. And yeah, people are pretty excited about it.
Do you have some thoughts that are needed to improve the space and maybe make you excited about it? What's your personal opinion?
Oh, I mean, it's not that I think it's pretty cool. I think that they like creating incentives for people to borrow and lend is something that is healthy for the space and like should encourage use of this, which just and encouraging the use of borrowing and lending markets just makes, like, for instance, interest rates more efficient, which is a good thing. And yeah, I also am generally excited by weird situations, and the price of comp is certainly a weird situation. It's not clear whether it's too high or not, or even if it's too low. It is clear there will be a lot of volatility, which is the kind of thing that I do get excited by.
Well, I'm glad it came out to give you some excitement because Bitcoin has not been very exciting lately.
No, that's not fair. Bitcoin was so exciting for so long, and it went up a few percent yesterday. That's like in a typical asset class. If the biggest thing in your asset class goes up by 2%, that's like a big deal.
Okay, sorry. I take that back. Do you know why they call it farming instead of mining now? Where that started?
Oh, I think it started because people were like, it was like a meme.
Of course.
I mean, it is just mining, but people are calling it farming because it's like a game.
I've seen a lot of farming memes.
It's like
on
Farmville.
Oh, okay. That makes a lot of sense. And then final couple questions before we wrap this up. What do you want to see yourself growing in as a trader, as a quant? What are fields? Because I can imagine you just continue learning and growing your capacities. What are some things you're aiming at right now?
Yeah. Yeah, so I'm always aiming to find, like, the goal I always have is find the next great trade. And one thing that I can definitely get better at is questioning my assumptions better. So for instance, it's really easy to miss great trades when you have some assumption of how things work and you dismiss evidence to the contrary because it conflicts so strong with an assumption you hold really strongly. And like lowering my bar for when I'm willing to let something challenge one of my assumptions is something that I recognize as a huge flaw of mine and that I'm always trying to get better at. And yeah, so that sort of leads into topic of like recognizing great trades, and that also requires looking at a lot more things than I think most people tend to, and definitely than I tend to. And so getting better at increasing the breadth of the sorts of opportunities I look for is something I need to get better at. And yeah, just improving my skills at determining what studies to run, making model changes accordingly, and like following through on that entire process is something that I can always get better at as well.
Yeah, that really resonates with me. The thing about not making it incredibly difficult to shift our assumptions.
Yeah.
One of my only core beliefs is that the only constant is change. So really like hearing that from other people as well, and just to see that, you know, I have that motto for not for trading, just in general for my life experiences and learning. But it's really interesting to hear that same thing applies directly to trading as well.
Yeah, I would definitely say that in crypto trading, it's certainly the only thing I expect is that things will keep changing.
And then let's go to the crossword puzzle question. Are you going to continue building these crosswords?
Yeah, I was making one last night.
Oh, really? New York Times, when is the next one coming out?
I don't know. They only tell you like a week in advance when you're like before they come out. I have a few that are in the queue still. I haven't been making as many since I've been working here. Our hours are fairly intense.
What's your Twitter username?
My Twitter username is Alameda Tribuco.
Okay, Alameda Tribuco. I'm going to ask you to post when your next one is coming out.
I will.
And then have you guys go to the New York Times and put your minds against the mind of this smart man over here. I want to thank you for coming on the show. And, I know you're incredibly busy. Really appreciate it.
Yeah, it was fun.
Yeah, it was a good one. Thank you.